Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what is happening, what we can expect moving forward, and all of that good stuff. So as usual, if you enjoyed, don't forget to hit that like button. It does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live with the link down below in the description. For $3 a month, I share my intraday thoughts on Tesla's stock chart as it's moving throughout the day during the actual trading day. So with that being said, let's just jump into it. Tesla closing the day around $218 per share, which is going to be up just over about 6% on the day. A phenomenal rally on the day, which hopefully shouldn't come as too much of a surprise because, again, as many people I saw have been calling 150s and things like that, right? We've been talking about 185 roughly, right? We said that that is a possibility still. At least while we were inside this little wedge or the descending wedge. Clearly, that's not the case anymore. We talked about yesterday how we broke out of the wedge on this nice, beautiful finish on this day, right? Beautiful candle sticking out, beautiful looking. Like I said yesterday's video, this is probably one of the sexiest looking hammer candles I've seen in a while. Just absolutely perfection, honestly. And look what we got today. A beautiful follow through today, right? Beautiful 6% on the day, which again shouldn't be too surprising. Okay, maybe the 6% is a little surprising that is 6%. Maybe it's still 3 to 4% was expected in my opinion, but nonetheless, let's talk about it, right? So the most important thing to understand here is honestly, it's quite simple. It's really straightforward. At least I think it is. Now, we pretty much went up to very close to 620s, right? But we pretty much came up to this the 200-day moving average, which is this green line right here, and so far we got rejected by it. Not a severe rejection, but we are closing pretty much right at it. So that's number one. We have Apple earnings coming up on deck, right? Pretty much as I finish recording, they should come out, which can determine one of two things. This is what I see happening moving forward. This is roughly what I see. There's two options in my eyes of the bullish variant, which in my opinion, we are in the bullish uptrend here because, like I said, we have broken out of this descending wedge. Now, the way I look at it as follows. So if it depends on Apple's earnings. If Apple's earnings goes well, phenomenal. I think what happens is we run up to about 230, 21 EMA / 230, which is 225, 230, somewhere around that range, I think is where we run up to. Ultimately get rejected, ultimately set up that cup and handle pattern I've been talking about, right? That is still, in my opinion, a possibility, right? Which again, just as a quick reminder, will look something like this. It's, again, just super, oh, okay, well, let's try that one more time. That was a pretty bad example right there. Let's just try this one more time like this, right? Again, just a rough example, right? Something like this, right? That's the cup itself. And of course, then, we start forming the handle, right? So essentially what I see happening is one of two options. Assuming Apple's earnings maybe goes well or, whatever, the market happens to rally on it for, whatever reason, we can rally up to somewhere around 225, 230, something like that. Then I think we'll find a rejection, form the cup, then start forming the handle and ultimately go from there. Right, and I think from there we can potentially come back down to about 212. Worst case scenario, that remains bullish in my opinion, is bouncing off this gap fill here around 206. That's option one, right? Option two is going to be similar. Honestly, they're both very similar. It just depends on how much higher we go first before rejection. I do think that we will reject pretty soon. It's just a matter of which area, I guess. So that's option one. Option two is we pretty much reject right around here, right? Right around this 200-day moving average, this kind of 220, 200-day moving average, right? We rejected over here, we rejected over here. Now we're at the 200-day moving average. So, definitely some resistance action happening over here. So we can reject in this area. That is a possibility. But the same thing applies, right? Even if we were to reject here, what I just see happening moving forward is essentially a move back down also to about the same levels I just talked about, 210 to 212, right? Which is pretty much this line right here or ever so slightly below, right? Which acts as a support, potentially even set up an inverted head and shoulders. We'll talk about that soon, which I literally just saw right now as I'm looking at it, as I'm talking about it. Sometimes that's just how I work, right? Sometimes I just succeed randomly. Anyway, that's an option as well, right? And then from there, what we do is either we go there or worst case, again, like I said, we come down to somewhere around that gap fill of around 206. Very same concept. It's just a matter of do we reject here or do we reject up at 225, 230, right? That's the main question. Now, let's talk about that inverted head and shoulders very quickly. There is a possibility for it, right? On this kind of 1 hour, 65-minute time frame, which will look something like this, right? We can have essentially the right shoulder right here, right? Let me go ahead and copy this. We can have the head right here, obviously, right? Easily. Right? That should be pretty obvious. And then, of course, we can have the right shoulder somewhere around here. This is another option that we can potentially develop, both of which, whether it's that cup and handle or this inverted head and shoulders pattern, are bullish options or patterns. They're bullish patterns. They're good to see. We are overbought now on the RSI on the 1 hour chart. So, even though I think we can go a little bit higher, and honestly, 225, 230 wouldn't surprise me, I do think that we are approaching a level where it's time to cool off a little bit, relax. Nice little rally off the lows. Honestly, let's just say in theory, you're like a god of trading and you bought all the way down to the lows, just as an example. You're already up 13%. That's a sizable run up in just a couple of days. So, we're approaching an area of a bit of a cool off, which is perfectly fine. There's nothing wrong with that, right? And I think from that, what you do is you let new buyers step in. You kind of reaccumulate, you consolidate. The other option is we can just completely go sideways. That is technically a possibility because the cup and handle pattern doesn't actually have to. So the thing with the cup and handle pattern is that it doesn't have to go downwards for the handle, right? You know how we talked about the handle over here? Just pretend the cup is there. And remember how we had the handle like this? The handle actually doesn't have to be to the downwards. It can be just simply a sideways handle as well. You can just go like this. And that's like the handle, and then you break out, right? You can also easily have that. It doesn't have to go downwards like that. So just keep in mind, there is a possibility that we also just do this instead, where we just, regardless, set up that cup and handle pattern, but instead we just go sideways. We just go sideways pretty much exactly to the right, not really doing a whole lot as we reaccumulate and essentially reignite the engine for the next rally up. Regardless, I think the point I'm trying to make is regardless of what happens here, whether we go down, whether we reject here, whether we reject the 230, all in all, I ultimately do expect another move higher, another leg higher, right? And the main level I talked about yesterday, I'm sure some of you remember, is going to be, again, about 240 to 242, which is this gap fill, which is going to be an area of resistance, of course. A lot of resistance in the past at the 240s level over here, support or resistance here, support here, right? Gap fill at 242, which also acts as a resistance. So a lot of resistance area around that 240 to 242 level, which I do expect to act as such, as a resistance. But there is a possibility, in my opinion, that, maybe if we get lucky, if the market's feeling generous or it's really trying to get some bulls trapped or whatever the case may be, like I said, we go to 250, which is going to be the retest of the red line of the descending channel, or in other words, the bull flag that we're in. And also a retest of the massive channel that we were in for a long, long time over here that, I removed. Now we just have the blue line, which was the bottom of the channel, to retest the breakdown, which we never have done just yet. So again, usually common to retest breakouts or breakdowns, and that would essentially take us to around the, low-ish 250s to retest that and to get to the top of this flag as well. So those are the options I see right now moving forward. Don't forget November, right? We talked about this many times. Phenomenal month for Tesla, phenomenal month for the market as well. It's an overall very bullish month. Doesn't mean it has to be, but usually, again, probability wise, it's a nice month for the market and for Tesla. And then so far, it's proving to be the case. RSI is looking, healthy again. We're kind of right back into it. Remember how I said whenever you enter overbought territory, how it's very common for Tesla at least to come back to somewhere around the 50-ish level of the RSI. We're already at 40, like 2. So I saw some people doubting like that, right? This is why I like to sometimes post videos. If I start making bullish comments like somewhere around down here and everyone's like, no, man, we're going 150, 70, Tesla sucks, company sucks, bull trap. I like seeing that. That to me tells me that we're going up. We're definitely going up. And that's exactly what happened today. So that's I like to kind of gauge sentiment, if that makes sense, through the YouTube comments as well. So that's another reason why I like doing that. Otherwise, we have the 50-day moving average above us, which is sitting at around 244, which will act as a bit of resistance. We have the 100 sitting at pretty much 250 right now, 251. All of those will act as a resistance and eventually if we get over to them as well. So don't forget that as well. Taking a quick look at options flow, let's see what's happening over here, right? Go ahead and increase the premium ever so slightly. Not very bullish, honestly. It's not overwhelmingly bearish. It was a little bit more bearish earlier in the morning when I looked at it, or like around noon-ish. Not too bearish right now. I mean, it's definitely more bearish than bullish, but it's not really either one. I mean, we have a bit of a bearish flow here, 800K premium, 173.3 puts expiring in June of 2024. We have a bit of a bullish flow, 430K premium, December of 2025. Then we have some short-term bullishness and bearishness here, but nothing completely crazy of note, right? They're kind of mixed. So it's like 60%, maybe 65% bearish, and the rest is about 30-35% or whatever bullish. So it's kind of like it's somewhat mixed. It's not overwhelmingly in one direction. So take that for what it's worth as well. But ultimately, the way I look at it is, again, really depends on Apple's earnings. I think Apple's earnings may have come out. Let's take a look. Nice little Goku over there. You guys know how it is. Apple's earnings didn't come out yet. Let's see if Apple is moving. Where is my Apple right here? It's actually not moving at all. So Apple's earnings haven't come out yet. So we'll see what that does to the market. Obviously, if Apple falls, the market falls. That's usually how it works. So we'll see what Apple does to us. But ultimately, that's what I expect. I do expect a rejection relatively soon. I expect a potential consolidation, if not a bit of a retrace back down to those levels, 212, maybe 206 gap fill. Ultimately, I think it's a buying opportunity. Just my opinion, not financial advice. And I think we'll make another leg higher ultimately. And I'd be surprised and honestly a little disappointed if we don't at the very least come up to about 240s sometime in November, maybe a run up into Cybertruck event, who knows. But it would be disappointing if we don't at the very least come up to like minimum 230s, but ideally like at least 240. Really disappointing if we don't do that. But all in all, that's what I am seeing, that's what I'm thinking, and that is it. So let me know what you think down below. If you enjoyed the video, don't forget to hit that like button, and as usual, I will see you for tomorrow's video. Peace.